Waste Connections is an example of a company that gathers relatively little attention, yet it has consistently yielded positive returns and outperformed the market, while at the same time regularly increasing its quarterly cash dividend. Partly because it operates a less glamorous business, which is actually quite vital and interesting. That's because it offers solid waste services such as non-hazardous waste collection, transfer, and disposal, as well as resource recovery primarily via recycling and renewable energy production. On top of that, they provide oilfield waste treatment, recovery, and disposal services in several regions of the US and Canada, along with intermodal transportation services for cargo and solid waste containers in the Pacific Northwest area. The company has approximately 9 million customers in the United States and Canada across 46 states and 6 provinces, respectively. Collection services are for various customer types, including residential, commercial, municipal, industrial, and energy and production (ENP) customers. They provide these services under 6 different arrangements: governmental certificates, exclusive franchise agreements, exclusive municipal contracts, residential subscriptions, residential contracts, and commercial industrial ENP service agreements. These arrangements grant Waste Connections rights to offer solid waste management services within specific areas at established rates for extended periods of time. Some examples include governmental certificates, which give the company exclusive rights to provide services in Washington state, and franchise agreements that cover a broad range of services with specified rates and exclusive territories for 7 years or longer. In markets where exclusive arrangements aren't available, Waste Connections offers residential contracts with homeowners associations or works on a subscription basis with individual households. They also provide commercial and industrial services through customer service agreements lasting from 1 to 5 years. Additionally, they offer containers and collection services in E&P markets with specific waste storage or treatment limitations. Waste Connections owns or operates approximately 103 landfills, consisting of 78 MSW, municipal solid waste landfills, 9 E&P waste landfills, and 16 non-MSW landfills. These landfills are designed to accept construction and demolition, industrial, and other non-perishable waste types. 7 of the MSW landfills also receive E&P waste. The company owns landfills for vertical integration in markets where landfill ownership is financially viable due to economic and regulatory conditions. They also own landfills in certain areas where they believe they can attract customers to their facilities based on location or market dynamics. In cases where Waste Connections operates a landfill but does not own it, the property owner, usually a municipality, holds the permit, and the company manages the landfill under a landfill operating agreement for a contracted term. If the contracted term is not the life of the landfill, the property owner is responsible for final capping, closure, and post-closure obligations. The average remaining landfill life for their owned and operated landfills, as well as landfills operated under life of site agreements, is estimated to be approximately 32 years based on projected annual disposal volumes. Many of their existing landfills have the potential for expanded disposal capacity beyond what is currently permitted. Waste Connections actively monitors available permitted in-place disposal capacity at their landfills and evaluates whether seeking capacity expansion or other permit modifications is advisable. Recently, they were pursuing expansion of permitted capacity at 11 of their landfills, bringing the estimated average remaining landfill life to around 35 years when considering probable expansion capacity and projected annual disposal volumes. The operation of landfills inherently presents challenges in terms of acquiring, leasing, or renewing landfill operating permits. Obtaining required approvals for solid waste management facilities can be time-consuming and expensive, while also imposing potential operating restrictions. These factors contribute to uncertainties in obtaining permits for existing landfills, as well as developing new ones. The company's ability to expand and operate is further hindered by the increasing difficulty and expense of obtaining necessary permits and approvals, making it crucial for them to secure landfill sites for expansion or acquire new landfills to sustain their growth. Though this isn't unique to Waste Connections since other solid waste providers face similar issues. Another aspect of the business involves the transfer stations the company operates. These facilities compact and load waste for transportation to landfills or treatment facilities via truck, rail, or barge. These stations extend direct haul reach and improve efficiency by concentrating the waste stream from a wider area. In addition, Waste Connections offers recycling services for various recyclable materials like compost, cardboard, mixed paper, plastic containers, glass bottles, ferrous metals, and aluminum to residential, commercial, industrial, and municipal customers. They own and operate recycling operations and sell collected recyclables after processing to third parties. The majority of their recycled products are paper items sold in the United States, Canada, and Asia. However, fluctuations in end market demand may affect revenue and operating income due to price changes. Waste Connections believes that recycling is crucial for solid waste management plans due to increasing environmental awareness and regulatory support. they also acknowledge the need to fully recognize processing costs associated with separating recyclables into marketable commodities, which might lead them to pass the risk of commodity price volatility onto their customers. In terms of resource recovery at landfills, the main focus is the beneficial reuse of landfill gas, since Waste Connections develops and operates projects for harnessing landfill gas produced during waste decomposition at landfills. This methane component is a renewable energy source similar to wind, solar, and geothermal resources, which can be collected and converted into clean energy. They have gas recovery systems in 58 of their landfills that collect methane, which can generate electricity or fuel industrial power plants. Out of these projects, 16 use the processed gas for generating electricity sold to public utilities, while 10 process the gas into pipeline-quality natural gas sold to natural gas companies. Now, Waste Connections has over a dozen renewable natural gas projects in development. Additionally, landfill gas may qualify as a renewable fuel with available credits. On the other side of the fuel picture, it's important to note fluctuations in diesel or compressed natural gas, CNG fuel prices could impact their operating margins and reported earnings negatively. The company faces risks due to the volatile market prices of diesel fuel and CNG, which may lead to higher fuel and disposal-related transportation costs. Then for E&P waste treatment, recovery and disposal services. Waste Connections provides non-hazardous E&G waste treatment, recovery, and disposal services using landfills, MSW landfills that also receive E&G waste, liquid waste injection wells, and E&G waste treatment facilities. They offer various treatment processes based on site conditions and regulatory requirements. In some cases, drilling fluid residues are deposited in a landfill cell where liquids are removed before being injected into saltwater disposal wells or evaporated to remove contaminants. Waste Connections also provides access points for customers to transport produced clean crude oil to market via pipelines and manages the purchase and sale of the oil. Though, the demand for Waste Connections E&P waste services depends on the exploration, development, and production activities of E&P companies, which are influenced by factors such as crude oil prices and global energy sector transitions. These factors could impact capital spending and production rates, ultimately affecting Waste Connections' financial performance. To manage and grow their extensive breadth of services, Waste Connections' approach includes targeting secondary and rural markets with high local market share potential, controlling the waste stream by providing collection services under exclusive arrangements, optimizing asset positioning for disposal sites, offering vertically integrated services when necessary, and managing their operations on a decentralized basis. In order to achieve efficient operation management, Waste Connections uses what they term a decentralized decision-making structure, meaning they have regional vice presidents and controllers reporting directly to corporate management. Each operating location also has a district or site manager responsible for local decision-making and overseeing day-to-day operations. The company implements standardized operating procedures tailored to each market based on industry norms and local conditions, which helps improve profitability and streamline administrative functions across their services. At the same time, more fluid adjustments can be made to the growth strategy of the markets it operates in or hopes to expand into. The company focuses on obtaining additional exclusive arrangements through competitive bidding or acquiring companies with such rights. This includes franchise agreements, municipal contracts, and governmental certificates that create barriers to entry. On the other hand, the decentralized decision-making structure does carry risk if local managers make poor decisions because they have the authority to make many decisions concerning their operations without obtaining prior approval from executive officers, subject to compliance with general company-wide policies. Though so far the trade-off of quicker and more fluid decisions closer to the line level does seem to be working out for the company. To generate internal revenue growth, Waste Connections district management and sales teams work on increasing market penetration in existing markets, soliciting new customers, and offering upgraded or additional services to existing clients. They also seek price increases to offset costs and improve operating margins. The company aims to expand its operations by acquiring waste businesses in new or adjacent markets that can be combined with their existing operations. Waste Connections focuses on markets with significant growth opportunities where they can provide waste collection services under exclusive arrangements, gain a leading market position, or offer niche treatment and disposal services. In the solid waste services industry, which has experienced consolidation over the years, Waste Connections sees acquisition opportunities in select markets. The company capitalized on these opportunities right at the start of the decade by completing 13 acquisitions in 2023 with a net fair value of $752.8 million, 24 acquisitions in 2022 valued at $2.334 billion, and 30 acquisitions in 2021 worth $1.068 billion. These kinds of actions are essentially viewed as necessary because the North American MSW services industry is highly competitive and requires substantial investments in labor and capital resources. The competition includes three major public solid waste companies: Waste Management, Republic Services, and GFL Environmental, along with several regional, publicly held, privately owned firms, independent waste brokers, and small local private companies. The primary competition for these companies lies in the collection, transfer, and disposal of waste. Their main focus is on providing quality services at competitive prices to attract more customers. They also compete against alternative disposal facilities like incinerators and public operators who have financial advantages due to their access to user fees, tax revenues, and other resources. Competitors may sometimes lower their service prices to expand their market shares or secure municipal contracts through bidding. This can pressure companies like Waste Connections to reduce their own prices or risk losing business. Also, the industry faces challenges from increasing emphasis on waste reduction programs such as recycling in the US and Canada. Acquiring collection operations, transfer stations, and landfills also presents competition. Publicly owned regional and national waste management companies are common competitors for acquisition candidates. This can sometimes make further acquisitions unfeasible or result in difficulty finding suitable candidates at favorable prices and conditions. In the E&P waste sector, smaller regional companies using various disposal methods pose as primary competition. Some public and private companies like Waste Management, Republic Services, Clean Harbors, Secure Energy Services, Nuvera Environmental Solutions, and Trinity Environmental Services also compete in certain markets. Additionally, customers have the option to use internal or outsource to another third-party disposal company, creating more competition in the industry. Further challenges arise from extensive federal, state, provincial, and local environmental, health, and safety laws and regulations that govern how Waste Connections and its peers in the solid waste industry operate, particularly with regards to activities like landfills, transfer stations, solid waste transportation, intermodal operations, vehicle maintenance shops, fueling facilities, and oil field waste treatment. Compliance with these laws can be costly, and non-compliance may result in permit revocation or criminal prosecution. In the U.S., regulatory agencies like the EPA, state environmental agencies, and other federal, state, and local authorities administer these rules. In Canada, federal departments like Environment and Climate Change Canada and provincial ministries such as the Ontario Ministry of the Environment, Conservation and Parks oversee the legislation. The company faces potential penalties or cleanup liabilities for releases of regulated substances into the environment, and it is subject to substantial costs for compliance, enforcement actions, or permit-related expenses. Consequently, it will be crucial to at least outline laws and regulations to some degree in order to understand what Waste Connections and its competition must go through to maintain their market positions, and see what potential challenges can emerge in the future due to evolving environmental protection frameworks. Starting with the Resource Conservation and Recovery Act, RCRA of 1976, which regulates waste management in the United States, including generation, treatment, storage, handling, transportation, and disposal of hazardous and non-hazardous waste. It also requires states to establish programs for safe solid waste disposal. Subtitled D regulations under RCRA govern non-hazardous waste landfills, setting location restrictions, design standards, operating criteria, and more. States typically implement these requirements and may have stricter rules. Oil and gas exploration and production, E&P waste, is generally regulated differently than hazardous waste. E&P waste is exempt from RCRA's hazardous waste regulation, but requires permits for land treatment and disposal. These operations are typically regulated at the state level, with varying regulations. If the E&P waste exemption is repealed or modified, more stringent operating and disposal requirements may apply. RCRA also regulates underground storage of petroleum and other regulated substances, requiring tank registration, compliance with technical standards, release detection and reporting, and corrective action. Some facilities and operations are subject to these state-implemented requirements. Violations can lead to permit suspension or revocation, civil liability, fines, and penalties. CERCLA, also known as the Superfund Law, was established in 1980 to address the investigation and cleanup of contaminated sites in the U.S., where hazardous substances have been released or threatened to be released into the environment. It imposes strict joint and several liability on responsible parties such as current and former owners, operators, those who arranged for disposal, and transporters that selected the disposal site. This means they can potentially bear full liability for cleanup costs without fault. CERCLA also allows the EPA to issue orders directing responsible parties to respond to hazardous substance releases. Additionally, state laws similar to CERCLA may expose companies to liability under independent statutes. The EPA is considering adding certain contaminants like PFAS and BPA to CERCLA's list of hazardous substances, which could increase liabilities associated with cleanup activities or create additional liability even for acts that were in compliance with existing laws. The Clean Water Act of 1972, also known as the Federal Water Pollution Control Act, regulates the discharge of pollutants into waters of the United States, WOTUS, which includes surface and ground waters. This legislation governs various sources of pollution, such as solid waste disposal facilities, transfer stations, and oil field waste facilities. To discharge pollutants into WOTUS, sites or facilities must possess a permit. The Clean Water Act may require monitoring and treatment to reduce pollutant levels in discharges, particularly for landfills and other wastewater treatment facilities. The definition of WOTUS has been subject to change over the years, affecting regulation applicability. A 2015 Clean Water Rule aimed to expand federal control over water resources by broadening the WOTUS definition. However, this rule was repealed and replaced with a narrower scope in 2019, which was then vacated in 2021. In December 2022, the EPA and Corps published a final revised definition of waters of the United States rule, influenced by the pre-2015 definition. This rule became effective on March 20, 2023, after legal challenges from states and industry groups. Changes to WOTUS definitions could impact landfill operations by increasing regulatory requirements or hindering project development. The Clean Water Act also mandates spill prevention, control, and countermeasure requirements, necessitating site-specific plans and containment structures for hydrocarbon storage tank releases. Furthermore, the Act contains provisions prohibiting development or requiring permits before constructing or expanding landfills in designated wetlands areas. The state's Waste Connections operates in May have delegated authority to implement Clean Water Act requirements, leading to more stringent state-level regulations than federal guidelines. In Canada, waste management is regulated primarily at the provincial level through various laws and regulations. These govern the generation, treatment, storage, handling, transportation, and disposal of wastes. Each province has its own regulatory regime, but key requirements are similar across jurisdictions. The Environmental Protection Act, EP Act in Ontario, is an example of such legislation that regulates waste management activities. It requires approval or registration for establishing, operating, or altering a waste management system or waste disposal site. Specific terms and conditions of these approvals may include emission limits, monitoring and reporting requirements, siting and operating criteria, financial assurance or insurance, and decommissioning requirements. Certain landfill sites are subject to more stringent regulatory requirements, including prescribed design standards, leachate collection systems, landfill gas management or collection systems, and site closure plans. The Federal Canadian Environmental Protection Act, 1999, imposes requirements on the interprovincial and international movement of hazardous wastes and recyclables, affecting waste movement to Canadian facilities. Waste management projects such as waste treatment and landfilling sites may also be subject to provincial or federal environmental assessment requirements. Breaches of these laws or regulations can result in suspension or revocation of necessary approvals, fines, and penalties. Contaminated site remediation is regulated by provincial environmental laws in Canada, with each province having its own regulatory regime. For example, the EP Act in Ontario authorizes the issuance of orders to responsible parties for undertaking remedial actions. These orders can be issued on a joint and several liability basis, imposing costs for compliance that can be very substantial. Provincial jurisdictions may also provide statutory compensation rights for losses resulting from discharged substances into the environment. Additionally, federal laws regulate the release of certain substances into the environment, potentially imposing liability on companies like Waste Connections for required cleanup costs due to contaminants released during operations. In regards to employees, Waste Connections focuses on leadership development through multi-day servant leadership training sessions for their management team. The company also offers various training programs such as safety-driven and district management training, targeting every level of employees. In 2023, the organization opened its first commercial driver center to provide Class B commercial driver's license training for existing and new staff, aiming to address the driver shortage in the U.S. expected to double by 2030. Additionally, they launched a learning management system, LMS, to track employee progress and make more training sessions available to employees, with nearly all employees participating in either virtual or in-person trainings. As for cautions relating to employees, increases in labor costs and limitations on labor availability may negatively impact Waste Connections' financial results due to labor being one of their highest costs. Even small increases in labor costs could substantially affect their cost structure. A shortage of qualified employees might force the company to spend more on wages and benefits, hire more expensive temporary workers, or outsource services to pricier third-party vendors. Higher employee turnover could lead to increased recruiting and training costs, as well as higher operating expenses related to maintenance and risk. Waste Connections has faced challenges in hiring qualified staff due to competition with other businesses in their markets, which resulted in higher employee turnover and longer hiring times for new recruits. The company also faces potential inadequacy in their accrued amounts for landfill site closure and post-closure costs. Additional costs may arise from environmental problems leading to remediation expenses or regulatory enforcement actions. Without a doubt, labor and regulatory compliance will be key factors to observe as the company presses on. For more on Waste Connections and other companies, follow Ascencore. Thanks for watching and have a nice day.